Hey everybody, what's up? How's it going? Welcome to my channel and welcome to my June monthly stock portfolio update. If you guys are new to the channel, every single month I like to kind of go over my entire stock portfolios and share with you guys how my stocks have been doing. Now, I started this YouTube channel earlier this year. We are about on month 7 now, and if you guys missed my previous videos, I'll link to the entire playlist in the description of this video. That way you guys can check out my previous monthly stock portfolio updates. But today we're going to be focusing on the month of June. So if you guys don't know, I actually have 3 portfolios that I actually invest into. The first portfolio that I have is with Wealthsimple Invest, and this is the first portfolio that I ever created. This was made with a robo-advisor, and this is where I have the bulk of my income. This is the first portfolio we'll talk about. The second portfolio that I have is a dividend investing portfolio. This is one that I grew on this channel completely from scratch. That's going to be the second portfolio that we're going to talk about. And the third portfolio we're going to talk about is my REIT investing portfolio. This is my portfolio that's 100% based off real estate stocks. So before we get into the portfolios and I let you guys know how things are going for this month, I just want to say if you guys enjoyed this video, please give it a big thumbs up. I would really appreciate that. If you guys want more dividend investing videos and more stock update videos that are Canadian based, be sure to subscribe to the channel. Alright, let's jump into our Wealthsimple portfolio and let's see how my stocks are doing for this month. Alright guys, what is up? How's it going? This is my Wealthsimple portfolio. Just so you guys know, this is the high growth portfolio with Wealthsimple Invest. And just so you guys know, this is my first portfolio that I ever made. I ever got started with investing. I got started with investing in about March 2019. It's about a year and a half or so ago. And I've kind of been investing ever since then. And I started this YouTube channel earlier this year to kind of like help document my journey and also show you guys as I'm learning new things, and also like just show you guys how easy it is to get started with investing and whatnot. And I'm still learning as I go. There's a lot of things I'm learning as I do this YouTube channel. I'm learning more about different things. So investing is one of those things that you just kind of learn as you go kind of thing. But there's a lot of ways you can kind of get started without really knowing a lot, and choosing a robo-advisor like Wealthsimple was one of the first things I did. And you can see that this is my biggest portfolio by far. As you guys can see, I have $47,000, $509 with a total of $385 in returns as of this current date. And keep in mind, like, this portfolio was invested before the big crash that happened earlier this year. So obviously it took a big hit, but it's also kind of recovered to some degree. I'll dive into the portfolio and I'll talk about the different assets in a second. We can kind of take a peek at what's performing and what's not performing. But just so you guys know, this is the high growth portfolio and we've had this for a while. And I do recommend robo-advisor / ETF investing, which is what Wealthsimple Invest does if you are new to investing, because it allows you to get started with investing. You know, it's very low risk in a sense, because investing in the broader market is one of the smartest ways you can do it. In fact, it's the main way I've been doing it for the past little while and have had pretty good success so far. And I recommend, if you guys are new to investing, or even if you're not new, kind of as you're learning stuff like that, investing into ETFs in the broader market is one of the smartest things you can do. And one thing I do want to point out before we go any further is that I did contact Wealthsimple and they set up me a new deal for you guys. So if you guys want to set up an account with Wealthsimple, I'll bring up the link here. I'll put it in the description of this video. You guys can click the link, and basically what this will do is this link will allow you to, instead of get to $10,000 managed for free for 12 months, it allows you to get a $50 bonus. So you basically get cash up front for putting a minimum of $500 with Wealthsimple Invest. So I just want to point that out for you guys. All you guys got to do is click that link in the description of this video, and you make an account here really quickly, and all you have to do is put $500 in, and as long as you put $500 in, you'll get $50, and they also give me $50. So you'll reward yourself, you'll get $50, and you'll also reward me. So if you guys want to support the channel, that's probably, other than watching my videos, that's probably the best way to do it. So if any of you guys find this video helpful, I'd really appreciate that. But anyways, let's get into the video here. Let's talk more about Wealthsimple here. So we have $381 in returns, and this is all time. We can go over year, and we can see the different stats here. I'm just going to zoom down here and see, and let's just look at our percentage base. So our total return right now in percentage is the easiest way to do, in my opinion, 0.6%. So we took quite a bit of hit. This portfolio has been up and down quite a bit, and it was up pretty high before the crash happened because it's a high growth portfolio, right? And then once the crash happened, it went down quite a bit. Like, I remember we were down about negative $8,000 when the crash first happened, and then we've kind of slowly recovered ever since then, kind of thing. And you know, it's not at the best point right now, but I'm happy with where it is because it was a lot worse for like the longest time. But here's the portfolio here, and it's pretty diverse, and it's pretty wide range of different ETF and equities across the board, mostly in US and international equities. That's the big key for this portfolio. As you can see here, our first ETF that we have here is a VTI, which is a Vanguard US ETF. We have $10,000 worth with 50 shares, and the performance has been 4.7%, which is pretty solid. Like, this is, US stocks for the most part are what bringing this portfolio up, and this is why I always say US stocks are always really good to invest into. Even if you're investing into a Canadian tax-free savings account, I know you get taxed on dividends and stuff, guys, but you do, like, overall you'll probably gain more money in the long run if you invest in the US stocks. The only reason why I mentioned that you don't invest 100% into US stocks is, number one, because of the exchange rate, especially right now it's super high, and number two, US markets are not immune to everything either. Like, they do have their rough times, they do have their rough years, so it's always important to diversify to at least some degree. So this portfolio is pretty much diversified across the board. Like, it's pretty much foolproof that going into the long run, this portfolio should do well, and that's the whole point of it. It's like long-term growth in a tax-free savings account. Earn as much income as possible. That's the whole point of it, right? So, and then eventually over time, I probably will maybe shift it to maybe more like dividend based, or I might cut it back. We'll have to wait and see. But for now, this is how it's going to be. And our second ETF here is International Equities. This is XEF. This is an iShares ETF once again. You'll see that they really like iShares, and I like iShares too. I think they have some pretty solid ETFs. Once again, $10,000, so just as much as the US stocks, 360 shares, negative 4.1%. So most of the international equities across the board are pretty low. In fact, everything other than US stocks, for the most part, like the broader markets, are pretty much in a negative still. Here's emerging markets, EMV. This is a lot of Asian companies and stuff like that. This one has been on a slow path to recovery since the crash happened. It was sitting at, I remember when it first happened, it was sitting about like 11%, and then it kind of slowly climbed up to about 6%. I don't know how long it's going to take for EMV and some of the like Chinese markets and the Japan and stuff like that to recover. It's probably going to be a while, but once again, we have quite a bit here with $7,000 and 111 shares overall. I'm just going to be keep buying them, and then when they do kind of come back and bounce back, that's where you're going to make the money, right? Always want to buy the dip, buy when things are low, because once they do recover, and they will eventually, you'll get that nice big growth, right? So that's why we keep putting money in here. And keep in mind, guys, Wealthsimple does the investing automatically for you, which is a nice thing about a robo-advisor. It's pretty much like a couch potato type of investing. You put the money in, they pretty much manage it for you. Next up we have is Canadian Equities. This is 10% of our portfolio, which is a little bit lower, and I think if it wasn't like, if Wealthsimple wasn't a Canadian company, they might not even have this much. But I do like Canadian stocks. I think they're really good, and they have some of the best dividend-based stocks. And XIC is a pretty good ETF here. So we have $5,000 here, and also my other dividend portfolios are pretty much predominantly Canadian. So that's why I don't mind having a little bit less Canadian stocks in here, because I already have a bunch of Canadian stocks in other places. So we have 219 shares, negative 4%. So Canadian stocks have recovered a little bit. Still pretty low, but they have recovered a bit. Next up we have is Global Equities, ACWV, another ETF, $5,000 worth of shares, 44 shares total, negative 3. Once again, this is mostly US based, but it is globally, like all across the board. And then at the bottom here we have is a US equities Canadian hedge fund, which is about 3%. So sitting about a little bit under VTI here, but once again, this is US based, so that's why that's up. And then at the bottom here, we have some bonds, which makes up about 10% of the portfolio, which is pretty low actually. And we have ZFL, which is a Bank of Montreal long-term federal bond ETF, which is 12%, which is not too bad actually. Bonds typically go up when equities go down. When equities go up, bonds typically go down. That's the way it usually works. But once again, we don't have that much money in bonds, but hey, you know, it's $3,000 to be 300 plus. It's something, right? And QTIP is a US based Canadian hedge bond index, and we have about $1,000, so not much in there at all, and 5% gains. So we have some cash sitting at the bottom that Wealthsimple is probably not investing right now, because the day I record this is Canada Day, so everything's closed. That'll probably get invested within the next couple days. I find Wealthsimple, if you put cash in, it'll take like a couple days for them to kind of invest it, kind of deal, which is fine. So that's the portfolio, guys. Nothing too fancy on there. Let's check out the activity, and because it is June, the end of the second quarter, there's going to be tons of dividends coming in, as you guys can kind of see here on the right hand side. We got some pretty big dividends for June. I love June because June is like June and December are like the big dividend months for all my ETFs, because every single ETF I just showed you guys pays a dividend. And those are like hundreds of thousands of companies basically paying out all their dividends. And we get those distributions in June and in December. Some of them do quarterly, so 4 times a year, but I think every one of them does June and December. So we get big dividend chunks during those periods, as you guys can see. So I'm just going to sort this so all we can see is dividends really quickly. But we can see here, I'm just going to kind of go at the bottom here so you guys can see. We first started this portfolio back in March. Yeah, it was about March, February. I didn't start really putting any serious money until about March-ish, as you guys can see. But the dividends basically kind of slowly grew over time with these portfolios. You know, I kept putting money in on a regular basis, kept putting money in, and you can see the dividends slowly creeped up. In June 24th last year, we got $96. That was our big dividend. And then we got another one for $40. And then since then, slowly kind of creeped up here. You can see these increases. I'll zoom in a little bit so you guys can see a little bit better. Slowly increased. And then in December, we got some big distributions once again because, you know, it's the end of the year. And then slowly, once again, slow increases. And then in March, we got a couple good ones. And then kind of going towards June here, we got some more big ones. $135 and $127 and a 60-cent one and some interest from my savings account that has nothing in it. So the first dividend we got was from Q-Tip. Actually, the first dividend we got here in June was from ZFL. So these are the two bonds. These two bond ETFs pay a dividend monthly. So $7 from ZFL and then 66 cents from Q-Tip. Obviously not that much, but hey, it's something. And then in June 23rd, we got EEMV paid us a dividend of $81, and then ACWV paid us a dividend of $54. So nice, once again, big dividends. Now I do get taxed on those because they're international dividends in a tax-free savings account. But once again, I mean, the growth from these accounts when the markets do recover will probably be pretty tremendous. I believe eventually that it won't even matter because you'll get that stock appreciation, which would be more than what you'd get in dividends anyways. Next up, once again, we have another dividend. This is from just XEF alone, but this is one of the biggest. I think this is like the second biggest holding in my account, like I just showed you guys. So obviously their dividends are going to be pretty big, and $127. So right here in alone in dividends, we got about $250-ish or so. So not too bad month for dividends. And if you guys wanted to see, like, if you were comparing this to like an ETF that did monthly distributions, you could just, you know, divide these by how many months kind of thing. So if this is like, this one only pays twice a year, it'd be paying every 6 months, for example. So you could just divide one of these numbers by 6 and you'd get the monthly payout if you wanted to do that kind of thing, if you guys are interested in that. So this is his portfolio, guys. Nothing too crazy going on here, as you guys can see. Still pretty down overall. Around last month, we had a bit of an increase. I think we're up about $1,000 or so last month. But once again, markets have kind of dipped down. You know, and we're not too sure what's going to happen. It'll probably dip down a little bit going in the future, but who knows? It might rise up. We'll just have to wait and see. So that's my Wealthsimple Invest portfolio. Let's jump on to Wealthsimple Trade, and I'm going to go over my dividend investing portfolio and my REIT based portfolio. All right, so we'll start off with my tax-free savings account here, and once again, this is the dividend investing case study that I do. I publish once a week, just to kind of, if you guys are wondering, kind of thing. If you guys aren't familiar with that series, basically what I do is every single week I put money into this portfolio and I try to build up a dividend investing portfolio. The goal is to get this portfolio one day to 6 figures so I can kind of make some fixed income on a regular basis kind of thing, and that's the whole point of it. So this is a portfolio that I built, I think and it was in January-ish, and this, like, it was one of the first videos I did on this channel, and we kind of built this portfolio from scratch. So if you guys want, I'll link to that playlist. You guys can check that out in the description of this video once again. If you guys are kind of want to follow along my journey through dividend investing kind of thing, if you guys are interested in that. But here's the portfolio here. As you guys can see, a bunch of these things are popping up about our dividends we got for this month. We do get a bunch of dividends from this portfolio on a monthly basis. A lot more than my other one, as you guys will soon see. So this is a tax-free savings account once again, $2,000. And by the way, the other Wealthsimple Invest account is a tax-free savings account as well. So I'm kind of nearing my contribution limit. So I'm going to have to figure out what I'm going to do going towards the end of this year. I might hit my limit. I might not. We'll have to wait and see. Hopefully I do. We'll have to wait and see. And we might move things around, but we'll have to wait and see. So tax-free savings account, $2,672 Canadian. As you guys can see, all time we are down about $92, which is 3%. And about over the course of 1 month, we are negative 50%. 0.50%, sorry, which is only $13. So basically we just took like the tiniest little dip ever at the end of the day so far in this portfolio for last month. In the past 3 months, we have actually gone up a little bit. So markets are on the way up, obviously, since the crash, but we still have a little bit of ways to go. And here's the portfolio here, guys. I'm not going to go over this because I kind of do this on a weekly basis. So if you guys want to see these stocks and picks like that, check out the playlist. Watch the last couple videos because that's kind of really go into this portfolio. I feel like if I go into this, it's going to draw this video out even more. So once again, most of these are Canadian stocks. You can see a lot of Canadian bank stocks, We have like Bank of Nova Scotia, CIBC, Enbridge, Manulife, Severia Corp, Shaw, TD, and then some ETFs at the bottom here, like ZWC, XHD, VYMI, VDY, and these are just for like diversification in the markets, and these are all dividend based ETFs. So one of them is Canadian, I think one of them is international, one of them is US based. So as you guys can see, I just kind of mostly invest in ETFs, and then I pick a few companies here and there as I learn how to do dividend investing kind of thing. And this portfolio, once again, is kind of like my journey through learning dividend investing. Yeah, so let's jump into the portfolio here, guys. As you guys can see, there's not too much going on. Let's check out the dividends, because I think we got a bunch of dividends, which everybody likes to see, of course, for this month. And I haven't updated my spreadsheet yet, so I'm not going to show you guys the spreadsheet in this video, but I'll just go over the dividends so you guys can see them. When I do my next dividend investing, the weekly update, which should come out in a couple days or so, I'll update the spreadsheet and you guys can see that. But here, basically, I'll filter out dividends, and we'll go tax-free savings account, and we can see here, here's the dividends we got from the portfolio in the past, I guess, a couple days or so. So we'll start in June, early June here. So Enbridge paid us a dividend of $1.62. ZWC paid us a dividend of 80 cents. VDY, once again, another ETF, paid us $2.35. Shaw paid us 79 cents, and then XHD paid us $1.40. And as you guys can see, it just kind of keeps stacking up from here. So these dividends just keep rolling in, and they keep stacking, and I keep investing them back into this portfolio. That's the whole idea with the portfolio, is to kind of create that fixed income coming in on a regular basis, and then invest into solid dividend-based companies and grow them over time. And as I learn how to do dividend investing better, and I learn how to pick better companies, I will share them with you guys, and we can all learn together. And that's the whole purpose of this channel. So that's the portfolio. As you guys can see, the dividends keep kind of rolling in on a regular basis. But I just want to show you guys, if you keep at it and you keep investing, your income will greatly increase. As you guys can see, it just takes a lot of time to get there, but it's very much worth it. So I'm going to jump into the REIT portfolio really quickly and just do a quick little update for you guys. Once again, I'll do a more thorough update in a couple days on the dividend investing weekly case study I do. But for now, you guys, if you guys are new to, I'll just kind of do a quick little update here in case you guys are new to the portfolios and whatnot. So all time on the REIT portfolio, we are, looks like the graph isn't working. Let's go to 1 year. We are down about $26, which is a negative 5.4%. So that's not too bad actually overall, but REITs are still kind of like, a lot of REITs, we'll wait and see over the next couple months what's going to happen with a lot of the Canadian REITs, because they're having a rough time right now, but a lot of them are kind of like really low price. So it just kind of depends on if things can open up and they can get their revenues, revenue streams coming back in and paying their rent and stuff like that. They could jump up and go crazy high, or they could have some bigger issues, but we're just going to have to wait and see what happens. I took a bit of an aggressive investments with REITs, but I do think that real estate will recover in Canada. And as long as I invest in the broader market with REITs, I think I'll do fine. And at the end of the day, it's not a ton of my money. As you guys can see, it's just a very small percentage of my portfolio in here. So over the course of the last month or so, REITs, doesn't look like there's update here. Once again, Wealthsimple must be having issues. It is Canada Day right now, so things are closed and stuff, so maybe there's issues with that. But over the past 3 months, we are up 4%. So REITs have once again made a recovery with everything else to some degree. And here's the REITs inside here. I'll show these really quickly because I don't have a lot, and these are all Canadian REITs. So just once again pointing that out there. And at some point in time, I probably will put these inside my tax-free savings account, so that I earn the dividends tax-free, and that makes the most sense, right? If there's anything I should probably put in there, it should be at least these, especially if it's just such a small amount. But here we have is BPY. This is Brookfield Property Partners. I did a video the other day about this. If you guys want to check that out, I think it's a very undervalued REIT. But once again, like all the other REITs, there's a lot of risk right now because they've lost a lot of revenue, and they're kind of just waiting to see what's going to happen. Next up, we have is H&R REIT. Then we have RioCan. We have CI First Asset Canadian ETF. We have VRE, XRE, and then ZRE. These three at the bottom here are ETFs, and I have the bulk of the portfolio there, and then I have some other REITs that I picked here and there. So that's a REIT portfolio, guys, and that's all my portfolios that I have on this channel. Once again, I like to share these on a monthly basis because I like to show you guys how I invest. I like to show you guys how I'm growing my accounts and whatnot. I like to show you guys how much money you can make with investing. And once again, guys, this channel is for you guys to kind of follow along and learn about investing yourself. It's all about this journey that we, take in part together. So let me know what you guys think in the comments. Let me know how you guys are doing. Let me know how your stocks are doing. Let me know how you've done this month. I'd love to hear about it. So if you guys enjoyed this video, please give it a big thumbs up. Yeah, let me know what you guys think in the comments, and thanks for joining me here today, guys. I hope you guys enjoyed it, and I'll see you guys later.